Welcome to Stock Talk with Nico Criticos. Today we're going to be comparing Align Technology stock with Smile Direct Club. And this video is dedicated to Adam Kharchaf. So both of these companies make this product that is an alternative to braces, okay? And it was introduced by Align in 1997. Now, Align's products are sold and monitored by dentists and orthodontists, and the average procedure time is 14 months. Some small gaps can take 6 months, while large gaps can take up to 24 months. Now, Align's technology is very strong with their social media. They have many different partnerships with influencers on TikTok and Snapchat, and their website in the last quarter received over 65 million visits. Now, the cost for their product is somewhere between $4,500 and $9,000. So it's not cheap. Now, Smile Direct Club, this is a smaller company founded in 2014. And in 2016 to 2020, Smile Direct Club and Align Technologies actually work together. Invisalign is the name of the product that Align makes. Smile Direct Club uses remote teledentistry, but doctors do monitor throughout the entire treatment time. Treatment is typically 4 to 6 months, but multiple states have complained that Smile Direct Club is violating dentist procedures, and the cost of their product is $1,950. So the cost is much cheaper than Align's, and the procedure time is much shorter. So it happens much faster, but their business models are a little bit different. Align Technologies has more, it's sold and monitored by dentists and orthodontists, and it seems like they pay more attention to keeping track with how the procedures are going. And Smile Direct Club doesn't really do that as much. It's more of through the internet. And then it says doctors do monitor throughout the treatment time, but it seems like it's not the same as the way Align does it. Now, Align, if we use Nico's stock market checklist, we can see that Align has been very successful stock-wise in the past couple of years, while Smile Direct Club has been not successful at all. And so if we go through all these things, we can see that Smile Direct Club is definitely down and oversold. Align Technologies, no, because they have a very successful stock chart. Revenue increase and net income increase for Align Technology. Smile Direct Club had revenue increase, but no net income increase. And Smile Direct Club has a healthy price to sales of only 0.46, which is incredibly cheap. And Align Technologies is going to get a no, because although they have 23% revenue growth expected for next year, their price to sales is 13, and that's not that cheap. Forward PE for Smile Direct Club is no, they're not profitable. Align Technologies, yes, because they have 22% growth expected in earnings next year, and the forward PE is 46. Not cheap, but it's lower than where it's been at in the past, and they're growing earnings pretty quickly, so it's not bad. Are these companies innovative? Do they have a moat? I would say yes to both. They're both doing something that's new. Align really started this thing with the Invisalign that was an alternative to braces, and Smile Direct Club took it a step further, tried to make it cheaper, tried to make the treatment time shorter, and tried to put less involvement with the dentist, I guess you could say, even though that could be a negative in some people's perspectives. Return on invested capital for Smile Direct Club, it's negative. Align Technologies, 48%, which is very high, very healthy. So this is going to get a yes. Profit margins are negative for Smile Direct Club, so that's going to get a no. Align Technology is 20% profit margin, so pretty healthy. That's going to get a yes. Cash flow, no, because it's negative. For Align, it's a yes, because they have 3x'd their cash flows in the past 4 years. So very healthy there. Are these growing industries? Yes, they are. I think we all can agree on that. In terms of the balance sheet, Smile Direct Club has their long-term assets are not healthy compared to their long-term liabilities. Align are, so that they're going to get a yes. Smile Direct Club has more short-term assets and liabilities, so that's going to get a yes. Same thing with Align. The equity has been decreasing actually for Smile Direct Club, which is not good. And for Align, it's actually been increasing, so that's good. Share buyback or a dividend. Smile Direct Club does not pay a dividend, and their number of shares have increased by 6%, diluting shareholder value. So not very healthy there. And Align's going to get a yes because although they don't have a dividend, they have 0% share increase. So that's healthy. They're not diluting shares. And is big money, this is like hedge funds and stuff, are they buying SDC? No, they are not, but they have been buying Align Technology. Diverse revenue streams, I put no for both of these companies just because they really are only selling that one product. And although they can make, like Align will make money from the dentists as using them, like they're pretty much the middleman between the dentist and the patient, but they're only, they don't have many sources of revenue. It's really just that product. So if it looks like based off of this, you're gonna say that Align Technology is a much more healthy company, and I would agree with that. But as far as which one is a more attractive buy at this time, I'm gonna have to go with Smile Direct Club because Align Technology is a much safer bet. Okay, you're getting a much more stable company that's proved themselves, and they have strong revenue and net income numbers. They have strong margins. They prove themselves. Okay, but the stock has reflected that, and so you're not getting that great of a deal. It's up over 20% on the year, up over 500% in the past 5 years. And how I showed earlier, the PE ratio, the price to sales are not that cheap. If we look at Smile Direct Club, we can see that this stock has not proved themselves. They have a lot to prove. They've been performing very badly, but the stock has reflected that as well. And that creates a unique opportunity for us because now all you need is one piece of good news for this company. If they can prove themselves in the slightest, this stock can have a major increase. On, vice versa with Align, where if one piece of negative thing comes out, if they have a bad quarter or something, that stock, we can see it come down a lot. So if I'm going to pick one, I'm going to pick Smile Direct Club. I think there's not too many other competitors in this space. And I don't think it's just going to be Align Technology as the only competitor forever. I think someone's going to have to come in and take that second place. And Smile Direct Club seems like in the best position to do that. So if Smile Direct Club can turn things around and get back on track, then we can see this stock, who knows, maybe 5x, 10x. So the stock's down 76% on the year. I mean, at the beginning of the year, this was a $15 stock. Now it's $2. So the risk to reward profiles here are much more attractive on Smile Direct Club versus Align. So that's going to be my pick. It's a possibility I make a small position in this. Smile Direct Club definitely is a riskier position, a riskier stock. But how I said, there's a good chance that if they turn things around a little bit, or one positive piece of news comes out, this stock can shoot back up to, $6, $8, $10. And so that's why I'm favoring more Smile Direct Club, but Align Technology is definitely a strong company. If that stock went down 30%, 40% from its highs, then yes, I think that's a very attractive stock to buy, but just not at these current prices. So if I'm picking one, I'm going to go with Smile Direct Club, but that's all for today. Thank you for watching.